They lowered their long-term operating margin guidance. They gave this material revenue growth deceleration guidance in the back half of the year. But if we step back, I think they're being overly conservative in terms of the outlook. I don't think fundamentals are going to deteriorate as fast as they are implying. You also have new growth initiatives at the company. So they're rolling out the stories features within both Instagram and on Facebook. I think long-term, we think that that's just as monetizable as the news feed. We may have a slowdown in the growth rate, but I think that's more temporary than permanent. You still have Facebook Messenger and WhatsApp, which are 2 billion plus user platforms that are zero monetized to date. So I still think they've got plenty of revenue growth drivers going forwards. They're making absolutely the right investments now in the security of the platform. If they don't get the security of the platform right, it's all over. And they had a lot of issues about this earlier this year, so they need to get this right. I think that they will. We think that they will. If they can, then this is a good asset. This is the opportunity to buy the stock here when you can buy it ex cash at a market multiple. A market multiple for Facebook, I think, is one of the most attractive points you can get.
Right. Brent, are you as constructive? And what about some of these other factors that are not necessarily in their control, like GDPR and the fallout from that, like Forex?
Yeah, I mean, I agree with Mark. We're very constructive long term. The stock's trading at a low 20 multiple now. If you put a 25 to 30 multiple on the new numbers that the street significantly cut, you're talking about a stock that's between $195 to $300 in the next 2 years. So we just look at the ranges on the multiple and suggest that, we're probably $20 below what we would think the real fair value is. And remember, the stock is up 45% since the Cambridge Analytica scandal. So to give back, 18 to 20% on a plus 45% off the 150 floor, you've had a pretty material acceleration in the stock. Obviously, a lot of the other tech names have had big moves. So, some short-term pain, but we think ultimately, the platform status still remains. This goes back to Microsoft many years ago when everyone thought Office was saturated. Nadella takes over and the stock is tripled. So we think Facebook's prospects still look good long-term, short-term. Obviously, there's going to be a lot of question marks around the deceleration.
I mean, you guys loved the stock. I'm just wondering, Brent, are you saving face a little bit here? 91% of analysts had a buy rating on this stock. Nobody saw any impact from the privacy concerns, from the scandals with Cambridge Analytica, the fact that Mark Zuckerberg had this tone-deaf comment about Holocaust deniers. I know that's not necessarily related, but all of this eventually was bound to add up. And I'm just wondering, how is it such a big surprise, the magnitude of the deceleration for analysts?
We were wrong short term. Long term, I think we're right. So we're not trying to save face. We're trying to do the right thing long term for investors. Look, no one can really anticipate what the CFO is going to guide. And the stock was off, high single digits. But then when the CFO gave the guidance, right, no one anticipated the growth rate would go into the 20s in the fourth quarter. So I think ultimately that was hard to handicap. But ultimately, we think, again, they've been pretty conservative in the past, and that over time, that these new numbers seem very achievable. And we took numbers down significantly. I think Mark and I were talking earlier, the magnitude of the cuts are beyond anything we've seen covering tech for a long time. And so ultimately, now we have a new base to build off of. And the new numbers basically, again, at a 25 to 30 multiple on earnings, which isn't crazy, gets you significantly higher if you can look out a year from now.
Yeah, Mark, I mean, Brent brings it up in a sense, and I've had conversations with investors who've said the same. That guidance is puzzling, and I'm curious. They bought back $3.2 billion worth of stock during the quarter. We've seen the idea that they're going to have to spend more in previous quarters. CapEx has always been heading up, new investment, adding people. It hasn't seemed to have mattered in the past. Did something change this quarter that they decided they had to change this guidance in such a significant way?
Well, I've got two possible answers to that, David. One is that as I look at Facebook and I look at Google, one of the takeaways is AI is expensive. Artificial intelligence and all the computational requirements, the firepower in order to run AI on massive data sets, it requires many more data centers than I think some of these companies had realized a year or two ago. So you're seeing almost a doubling in data centers by companies like Facebook. So I guess that's one. That's not necessarily a one-quarter surprise, but I think that's been a building surprise for the company and for investors. The other thing, though, David, I think there's one outlier in the entire internet space when it comes to political sensitivity, and it's probably Facebook, or it definitely is Facebook. And this is a company that was under severe scrutiny earlier this year and has seen a stock go to the record highs. So I think that they have a vested interest in making sure that investor expectations in their stock price at some level is moderated, and that they show to the public and they convince the public for good reasons that they are focused on security, and they amp up as much spend against that as they can. Look, you've got the midterm elections coming up. If Facebook gets hijacked during the midterm elections, that's a dramatic negative for the stock. So they got greater sensitivity than anybody else does on that issue.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.